Hey everyone, and welcome back to our special weekend edition of the markets across the world. In today's video, we'll be taking a look at our thoughts on the S&P 500 right now, Nasdaq, Bitcoin and crypto markets, Tesla, gold, US oil and more. And boy oh boy, do we have some massive volatility coming through in all these markets right now. We've had crypto crash, we've had the stock markets move down and then back up again. And of course, we've got some big movements on the commodities. There's a lot to look at this week and plenty of opportunity. So stay tuned to find out some of the key levels that the community is looking at together. See you soon, guys. All right, everyone. Well, one of the best places for us to start when we're doing analysis for the week ahead is to get a bit of an understanding on which things were hot for the previous week. And you can tell on this chart here that Apple was the hottest, 10.88% in the previous week of trade, Microsoft 6.05%, MasterCard also breaking out here, 8.63%, a large move there. MasterCard Visa really not doing so well in recent months, and that was a big turnaround. And most sectors just performed very, very well. There were, of course, some reds, but in general, everything bounced back up. And this is because it hit a key level, the 4,500 on the S&P 500. We spoke about it last week in our market recap. We picked that as a key level of interest as support, and it turns out that we were correct as a community. So if you're more interested in finding out these key levels, definitely consider subscribing. Smash that like button if you've enjoyed our content over the last couple of weeks for these markets, and we'll bring more for you. Now let's have a look, talk about Friday. So Friday's session, we saw Wall Street buying the close. And as we know, whenever they're buying the close, that's a good sign for markets in the next session. And what they do in the closure, where the big players trade, is more important than necessarily the open. So during the open, we actually saw a bit of a sell-off in the first hour to 2 hours of the market, and then that recovery. And remember, who plays over here? Retail traders. Who plays over here? The bigger players. And that's why many people choose to take more advantage of the first hour from the retail mindset, and then they look towards what is Wall Street doing in the close. For the major sectors, everything was pretty much up except for the biotech area, down 1.52%. Technology led thanks to Apple, 2.01%. And strangely, a double combo we don't see very often, XLP. So that's consumer staples and technology in the 1-2 slots. Energy also came back 0.74, and the rest was kind of mixed around the middle. Now, we've spoken a lot about the Santa rally. We've spoken about the optimism into the end of the year, and this tends to hold true. So just remember, the Santa Claus rally is technically a statistical thing. When Santa comes to town, these are the dates here from previous years. You can see when he goes back and the overall rally percentage. So a lot of people are calling for crashes on the market, for corrections on the market. I feel like we've seen a lot of those. Now, this isn't saying that 2022 won't bring some. On average, we have 3 to 4 larger corrections per year. So if we do have a nice correction in 2022, which I do expect, those kind of months are going to be looking at middle of Jan, Feb into March. They're very, very common. And then we'll be, especially the tech sector at that period. And then, of course, we'll be looking at just the price action from that standpoint. But there is a lot of seasonality weakness at the beginning of the year. And that's when many people are starting to call for that potential 10 to 15% pullback. But not at this stage, I don't think. Another thing that people discuss is, of course, gap analysis. And this is something that's been brought to us by Ian in our community. And he was talking about trading gap analysis from the S&P 500 perspective and also large stocks. So whenever you see a gap, usually the gap will fill the next day 20% of the time. And then the actual stats of gap filling drops off quite significantly. And while all gaps generally fill, this is up gaps, 75% of them fill over time. Remember, they may be filling due to some kind of correctional crash later on. So in general, if you're trading the gap trade, these are the stats, and you've got to look out for them in the first 7 days. And then after that, it becomes a lot less likely to be as relevant for you as a trader. Now, another thing of relevance was what was happening on Friday. So we saw the news come out, of course, in the US, the CPI. It was pretty strong number there, and the market seemed to like it. I mean, in general, the market came straight back up, and therefore the fear index went straight back down. We're back below 20, and this is a good sign coming into potentially the Santa rally and potential further strength in the market. We've really been calling for that turnaround around that 4,500 zone, and so far the US 500 is playing the game. VIX underneath 20, that's a big deal. Could it spike at any point in time? Sure. But traditionally, when you start to see it come back down, especially if we get new highs on the S&P 500, we might be heading back down to our special 15 level around on the VIX. So we'll continue to watch this as much as possible. Another thing that's been in big discussions here is the PCC. This is the put-call ratio. Now, we talk a lot about fear and greed in the markets. And the put-call ratio can kind of sometimes show us whether a market is actually going to correct or not. And I tend to believe, and a lot of members in the community believe as well, that when there are a lot of puts in the market like there are right here, you can see the PCC, so the puts have gone up significantly, there's less likelihood that the market will correct or fall. You'll notice during that kind of Thanksgiving period, there was a lot less puts in the market than there are now. And that traditionally allows more of a manipulation to the downside. And when we look at our S&P 500 analysis a little bit later, I'll explain that. You'll see why there's so many puts open. But the PCC is high. Again, that to me and many members in the community looks like a fairly bullish sign here for the market. If there's a lot of puts, Wall Street will not generally want to pay off on those. And a lot of the time, these puts are actually put in by smaller traders, hedge funds, and the market likes to, of course, take advantage of those. We've seen this several times play out now since we started making daily videos on the channel a very, very long time ago together. Let's move over to gold. Now, gold is lackluster again for a week, but the news is not all bad. We do have another long leg doji. So long leg dojis basically are, for anyone that doesn't know, an open and a close very similar to each other, which is this area here. Then we have a low and a high, and the market opens and closes similar. So it basically shows us it has no idea what it wants to do. Now, we've had a big long leg doji, and guess what? We got another one. Here's the high, here's the open, here's the close. Close is around 1782, right on this level of support. And again, we just need bullish action. We are in December. December, January tend to be fairly decent for gold towards the seasonality strength. We've detailed that many times on the channel. If you look over the last 4 years, you'll see it start around that December start. And it hasn't happened here. So we're neutralized on gold at this point, but we are looking at key levels. So I think there are some good key levels we can watch. One of the key levels is going to be the high of last week, and then we have that 1810. So let's get into the 4-hour chart here. Just have a quick look at what we see on the charts. So you'll notice this is the previous high of the previous week. We're going to be looking for bullish intentions past that. That should lead into that 1810 area, and 1810 plus, while we do have, of course, that is an area of interest for the week ahead. We'll be watching that very closely. We have warned, and I think the community's warned against the short here in many ways, because we saw some very weird price action coming into that. If you go back over to the daily, everything here is screaming short. Like we've got long leg doji, weakness candle, weakness candle, weakness candle, weakness candle, and they're everywhere. It's almost saying, you know, come on, sell it off. Why aren't you doing it now? Why aren't you doing it? The problem is once you get something that's so blatantly clear, I do tend to find that's one of those trap zones. And I think one of the big things here is if we do end up breaching past these levels, what you'll be doing as well is to the bull side, all of these moving averages, the blue line, the 50 exponential, the red one, the 20 exponential, and the 200 simple moving average, the green line, will all act as dynamic supports. And then we should be able to see a turnaround and a move back up. I'm excited for this zone. We'll certainly be looking at it closer on the channel over the next week. Silver is similar. With silver, we're just looking at 2260, and hopefully that will come through the same time as gold. Now, black gold, that's where the trading's actually been at. We'll start off with the weekly here. We didn't quite get past our long leg doji of the previous week, but we certainly had some good trades here. And we have, of course, the high, the low, and the closure just stopped short of this 20 moving average on the weekly. So it's been trapped between the red line and the blue line at this point. Let's move down to the daily. This is where things get really exciting. Oh, actually, it's more like the 2-hour that gets exciting, but you'll notice again, a little bit trapped. And then we'll get down to the 2-hour. Now, this is where we've liked it a lot. So we saw that Wyckoff accumulation. Basically, we had our lows, we had our maximum pain over here. We broke through the resistance, moved to the next level of resistance. Fantastic. That's a massive tick on trading with technical analysis. And then we've pulled back. Now, we would have probably preferred to pull back all the way down to this previous resistance, which will then act as support. But it doesn't matter. What we're looking for now is really a breakout of this 73 zone. And the good news for oil traders is we have a fairly clear next zone, and that's going to be right around this 75 area. You'll notice the previous supports. If you zoom out, you'll see supports on the other side. It's a great level, and let's hope that US oil can continue to strengthen up. Now, a lot of people will be saying, Tom, I don't want it to go up. I'm already paying too much for fuel. That's probably true. But remember, this is run a little bit by OPEC. And when OPEC decide that they're going to restrict barrels and do all of those types of shenanigans, we can trade with the direction of the price action. And even some people are starting to call out now, what if this is a massive inverse head and shoulders or something? It doesn't really matter. The main point is that you're looking for that strength. You're looking for the return and the recovery. And US oil got a bit of a battering, which we knew it may once it got up here. But we're certainly excited to see what can happen for the next week. So it's one to watch, and we've got some key levels there. Another one that's one to watch is our discussions that into the stock market. And we've got Tesla here to start off with. So Tesla's bounced off the 1,000 so many times. It almost looks like deja vu of last time, because we had, of course, that daily hammer, and then we saw what happened after that. What did we get on the Friday session? Well, we got another daily hammer. There's the daily hammer. Day traders will be looking for momentum. Again, movement up through here. We've got that 1,060, 70 area as a resistance. And if you can break through there together as community, then we're looking at that 1,170. So Tesla remains really more of a day trade scalpers kind of paradise at this stage. And we've detailed why when you have a large move on Tesla, the general consensus of what happens with the market is it goes into a bit of a sideways slog. And therefore day traders really play the best game there. It's like this previous run, we had a sideways slog, then of course we broke down, took a while to recover, and we were all on board the Tesla train at that point. But at this stage, look, 1,000 is clearly a huge barrier for it. We've seen great price action come off this zone a few times. If we get the momentum follow through, that's the key, the momentum follow through, then we're hoping that this thing can move straight back up there. Another thing that I think people are underappreciating is sector rotation right now. And there are some sectors that are starting to fire up, and they've been firing up for quite some time. One of those is, of course, materials. And I wanted to bring this to our attention because the monthly closure across the S&P 500 and across XLB and many other sectors was actually horrible. This is like a shooting star towards the downside. If you look at that, you would think, wow, that looks really negative. But remember, this is just a candle by itself, and the stats are not that amazing when you don't wait for the follow through, you don't wait for the next kind of real information to come out. So it looks like we're starting to reverse this. And on the monthly, that's the way it looks. On the weekly, again, nice pickup off the 20 moving average here, previous resistance. You'll notice I have that highlighted for my own reasons. And then we look here at this resistance and we're hoping for a break out of that zone. Is this going to be the strongest sector out there? Probably not. I mean, materials is what it is. But it's certainly looking like it's starting to ramp up here, and we have a nice little range, and we hope that, of course, if it does breach, it just goes on a nice run. Again, it brings into this idea of the Santa rally of bullishness. A lot of sectors are starting to look like they're putting pressure on that top end, which makes sense because the S&P 500 also is. Now, before we get into the S&P 500, the Nasdaq, and the crypto, let's talk about IWM, the Russell 2000. It's pretty boring, isn't it? I mean, this thing just keeps coming down to the same levels and not really showing us the gas. So we have the low, which is 212. We've obviously pulled back into the 220, which is the previous resistance. Fantastic. And now we must wait for turnaround stories. We're looking for lightning bolts. We're looking for double bottoms. We're looking for Wyckoff. We're looking for some reason on the smaller time frames for us to see Wall Street picking up IWM. And a lot of traders may not even feel like they like that. They might be just going, you know what? Unless this thing gets above this 226.30 area for the week ahead, I'm not interested in this market. The Russell has been annoying. These are the smaller cap companies, and they're just not showing the strength. I still like this zone. I think it's an interesting, very big key level. And for day traders, they should be watching it closely through market opens and setting alerts because it's a key zone. And you notice that if we get through 226, well, it really could start a nice level of participation for the week ahead for the Russell 2000. Nasdaq, similar kind of thing, except in this case, we're looking for it to break through 16,450. We've got here so much resistance. This is where just before we sold off, and then we rallied straight off that daily 20. So really pretty consistent here on the Nasdaq. It's rallied, it's doing well. Again, the fear is coming out of the market. We see that in the VIX. We see the put call ratio showing us that there's huge amounts of puts, huge amounts of bears trying to short this market down. When everyone believes it's short and when everyone's trying to short it, that tends to be not when the market starts to fall off. So bulls will be hoping for a closure above here on the daily or better for the week ahead. And that will be very, very strong. The bears are just saying, look, we need to get this thing back under here stat. And if we can't, well, we'll have to go into hibernation for a little while, and then we'll come back later. So it all started with us hitting, of course, the S&P 500 weekly that we'll soon show you. Let's move over to the QQQ just so you guys have the levels. The 2 hour, we've got here the 2 hour, and we have a Fibonacci on it. You'll notice there's the 2 hour 20 and 50 moving average. It did bounce off that zone. Didn't quite get down to the 38.2 fib. And yeah, we're just looking for this resistance breakout of the 400 on the QQQ, which is the exact same that we just discussed. Let's move over to the SPY. This is the market we should always be watching. Now, we really hammered home this idea of 450 last week. That was a huge zone. The weekly 20, guys. That is something that if you want to imprint it in your mind, the weekly 20, weekly 20, weekly 20, weekly 20, it's been very consistent here. Now, it will one day break through, and you better pay attention when it does. And of course, that is inevitable. It will happen. But yeah, it's been very good. Let's check out this resistance. Here they all are. Closure point. Now, notice there's no closure above the 470. So how big will that be for the Santa rally? I think fairly significant. We're right on the zone. Resistance breakout, further rally, possible pullback back down to test this area as well, which could allow conservative traders to get back in, and then we move back up. And a lot of people are saying, oh, Tom, the market's overpriced, man. And yeah, look, it may be by many metrics, but look at the hyper stocks. Some of those are down 40 to 60% now from their highs. So the market's done a lot of rebalancing. There are certainly some decent deals out there in some of these sectors. And I think that's where you've really got to be looking now. You've got to start to say, well, what's hot, what's not? Do I see good technical analysis bases and accumulation on some of these sectors that are not hot right now? And when you see it, possibly that's one of the things you want to be looking at. Here on the SPY, it looks pretty strong though for the week ahead. The other thing that we mentioned before was the options. And of course, look at this. Look how much red lines there are, guys. It's red line city all the way down. I don't know what that is. 25? That guy's is mad. But anyway, there's some puts over there. But most of the puts, you'll notice the big ones overwhelmingly are red. And when everyone's got puts in the market tends not to crash. Again, these are sitting around that 450, which we mentioned a few weeks ago. The 465, there's some, but there's not a huge amount of calls. So I think the market could still be open. It might even chop a little bit this week, but once it breaks through, we'll start to see the calls rise. And when that gets out of control, and of course we're seeing the opposite, then we start to pay attention and go, okay, well, maybe we need to be a little bit bearish on this market. Of course, it's the opposite of what common sense sometimes makes you think that actually does work out. And it makes sense when you think about who's trying to make money and who's trying to steal money from somebody else. Remember, that is the key here in the markets. SPX, if we're taking a look here, we've got our monthly R2 sitting around 4,800. So we probably expect the market to be not really going through this zone ahead of the end of the year. It would still be a big ask and a very nice movement. If we're thinking about percentages, how much is that, you might ask? About 2%, so it's not exciting, but that is a key area. Monthly R2s are no joke. We've seen the R1 previously hold the resistance. The R1 this time was clearly smashed, and now we look towards the R2. But you don't generally get through these monthly pivots through normal news. If you've got like a massive shock in the markets, or you have some kind of massive stimulus, you can, but look back in the history, again, monthly R2, monthly R1, monthly R2 near the end, and of course that's where it was. So it's good to look at pivots, and this is why we pay so much attention to them, because they can give us, when we are in an unknown market, where our expectations might lie. Let's move over to the crypto market. BTC shorts, that is all of the big whales, continue to kind of lower their shorting potential, which is good for Bitcoin. And the other good thing for Bitcoin is it's finally starting to recover a little bit. Small scare here. We got down to that 47K again. Not good when we get down there. We're on the 8-hour chart. We're dealing with this annoying resistance that we had previously. If we close above there, then we'll also be getting through an 8-hour 20. We get through maybe this 50K mark again, and surely that's starting to put in some good signs here for Bitcoin. Another thing that some Bitcoin traders will be excited about is what if through the week we get through this resistance, breach it, close above. Wow, that'll be fantastic. Big double bottom, big deal. as you guys know, a lot of traders will be looking at that as an accumulation base, and they'll be getting excited for the movement. We've also seen Ethereum start to drop back against BTC. So maybe there's a bit of a strengthening coming back into Bitcoin in comparison to Ethereum. So watch that one out, because Ethereum hasn't been as strong as some of the other coins in the last couple of trading sessions. Calendar, this is where the news is. PPI Tuesday, 8:30 a.m. New York time. Definitely be watching that. And then we have the big one, the Papa Pal. He's coming out to ruin our day, to ruin our fund. We have on the Wednesday, December 15th, FOMC statement, funds rate, press conference. Whoa, so much fun to watch him talk for an hour or whatever it's going to be. But look, this will be the bit of news that people are watching. They're going to be checking it out to see whether the Fed is in line with the market. And I think you need to remember, and everyone needs to remember this, that while it could be an outlier point, in general, the Fed's really looking out for the market in the US. It's not like every other place in the world where sometimes they'll do anti-market behavior. In the US tends to be positive. So let's hope that is also quite good there. All right, guys, thanks so much for watching. If you enjoy the videos, please remember to subscribe, smash that like button. It really helps us out. And I want to see your predictions. 2022, S&P 500. What price do you think it'll get to? I will literally let you guys know in the next couple of weeks what I think it's going to get to, but I'm super interested to see your comments first. Stay well, stay happy, and of course, trade as best as possible. See you in the next one, guys.